in the last session. So we just had the overview of what is exactly is this course all about, and we were only able to complete the one definition of revenue, right? And we need to start from there. We need to understand what is revenue again, and what are the different methods of recognizing the revenue. Okay, so we'll proceed from there. So just a quick refresh. What is a revenue? What we discussed about revenue was whatever amount we are getting in exchange of the goods or services that we are delivering to the customer is nothing but revenue. Okay. One more thing, this revenue should not be uh, like it should not be the amount that you are earning after deducting the charges. The amount that you are earning after deducting the charges is not revenue, it is a profit. Okay, when we are talking about revenue, we are not considering those charges at all. Okay, so for example, if you are selling the goods at 100 USD and your cost of manufacturing these goods was 80 USD, okay, so 20 USD is profit. Revenue will still remain 100 USD. So don't get confused with these two terminologies. 100 is your revenue, 80 is your profit. Sorry, 20 is your profit, and 80 is the cost or charges that you incurred to manufacture that particular good. Okay, so just be clear about these terminologies. Revenue is what amount you are getting without subtracting the charges. Okay, so now I'll proceed towards the next thing. Once we already know what is a revenue, now let's talk about a revenue recognition. Okay, so we already know what is revenue, but the question is, there are two questions. When to recognize the revenue, and second is how much, right? So I'll give you two, three examples here. Maybe we'll make this session more interactive now. So when to recognize the revenue? The answer is once the ownership of goods or services is transferred to the customer. Okay, so the thing is, till the time we are not transferring the ownership, let's say we are talking about goods. So till the time we are not delivering the goods to the customer, we are not entitled to book the revenue. Okay, revenue can only be booked once we finished our commitment to the customer. Once we finished the delivery of the material to the customer, then only we can book the revenue. Similarly, from the service point of view, even service also, once we completed our part, okay, let's take an example, any kind of service. Let's say you are delivering the internet plan, data plans to the customer. Okay, so these data plans, once you have already given the access to the user and user is already using that particular plan, then only you can book the revenue. It should not be like I registered a package today itself. Let's say I bought a new data plan today. So the company is not going to book the revenue today itself. Okay, they have to wait till the month end. Normally, this revenue is recognized at the month end when it comes to the service. Okay, but there are still some exceptions and all. We'll talk about that. But just understand this line. The ownership of goods or services must be transferred to the customer before the revenue is booked. Okay. The second question is how much? Okay, so take you some examples. Let's take the first example. What we'll do is we'll take one industry as our sample industry. Okay, so we'll be able to correlate the things. Let's say automotive industry. Okay, so this company is selling cars to the customer. So what will happen as soon as the car is sold? What do you think? Let's say the revenue, company is selling cars to the customer. Instead of cars, let me put it as car. At 10,000 USD. Okay. So what would be the revenue of the company? Just tell me whatever you think. Umer is saying 10,000. You can unmute yourself. We can discuss here. So 10,000 USD will become the revenue for this company. Now, if I am adding more conditions here, cost to manufacture is 800 USD or 8,000 USD. Will it change the revenue? Revenue will still be remain 10,000 USD, or there will be the difference when I say the cost to manufacture this particular car was 8,000 USD.
It should not change, right? Revenue is irrespective of cost.
Exactly. So this 10,000 USD will still remain the revenue for the company because this 8,000 USD is the cost, and we understood the definition of revenue, that revenue is something which you are calculating before deducting the charges to manufacture the goods or services. Okay, so irrespective, this is the additional information, but this is not going to impact the figures in revenue. Okay, so this 10,000 USD will be the revenue for a particular company. Now the question is, second question is how much? Sorry, how much you already know, 10,000 USD. Now the second question is when to recognize this revenue. So what do you think? When this revenue will be recognized? This will be recognized at the period end or the year end or maybe at the end of the contract. What do you think? Now, since this is the material sale, or we can say physical object sale, what will happen? Revenue will be recognized as soon as car has been delivered to customer. Very straightforward, right? Because we are talking about the physical object. As soon as this physical object is delivered to the customer, we can book the revenue. Okay, now this type of revenue booking or this type of revenue recognition is called as standard revenue recognition. Some background noise, please mute yourself. Yeah, so this type of revenue recognition is called a standard revenue recognition, which means what is happening here is this will be through normal sales order. Okay, so this is very standard scenario. Whenever you are creating a sales order, for example, let's take a simple example of SAP sales order. Normally, we create a sales order, we deliver the materials whichever are mentioned in the sales order, and we create a billing document. And as soon as the billing document is created, all the revenues are booked. There is no need to do any kind of transactions at the month end, at the year end, nothing, because the revenues are recognized as soon as the billing is created. Okay, so this is a very straightforward revenue recognition. For this particular scenario, you don't need any kind of revenue recognition technique to be used in SAP. Okay, because this is very much a normal cycle, order to cash cycle, what we follow in SAP. But the challenges are when you are selling the products or the services for which you are not able to recognize everything as soon as the material is delivered. I'll give you the example. Now let's take another example of the same automotive industry. So what they are doing is they are not only selling the cars, they are also selling the warranties. Okay, let's say this company is selling the warranties for 1 year at 1000 USD. Can you tell me now what will be the revenue? Same company is selling the warranties for 1 year at 1000 USD, or let's keep it as 1200 USD.
Yeah, still it should be 1200, right?
Sorry, Ram.
Yeah, so I think it is still 1200 because even if you are incurring more cost in the future to cover that warranty, your revenue is just 1200.
Okay, so you are saying the revenue will be 1200 USD.
Yeah, that's what I think.
It
I
is
think,
fine, but this 1200, yeah,
hello.
yes,
I think the revenue will be 100 USD to be recognized at the end of each month.
yes, perfect. So both are correct. You are saying 1200 will be your total revenue, okay, throughout the life cycle of this particular contract. But you are right that this 1200, because it belongs to 1 year of subscription or 1 year of warranty, this means because normally when we are talking about the accounting standards, we are following the periodic approach, right? It is not like the entire 1 year we will be booking as today. We need to follow the periodic approach, which means we need to divide this amount into equal number of installments per period. Okay, so which means that if we are paying 1200 USD for entire year, if I divide this into 12, because this is for 12 months, so 100 USD will be recognized per month. Okay, so coming to two questions. First is how much, and second is when. These two questions are important. Whenever we are talking about the revenue recognition functionality, if you answer these two questions, then it will be easier for us to uh, correlate the things in revenue recognition functionality. Right, so how much is, as you said, 1200. Okay, in the bracket you can also write 100 per month or per period. Okay, so total revenue which will be recognized is 1200, and when is, I think this answer is same, so 100 per month. Okay, so now with the same example, if we compare this to this, what we have done here, we created a sales order, we performed the delivery, and then we created a billing document. When we created a billing document, entire 10,000 USD was recognized as revenue. Okay, but in this case, since we are talking about the warranty, warranty cannot be created just like a sales order. Okay, so for this kind of transactions, we need to create a contract in SAP. Okay, so what we will do is we will create a contract, and contract, as you know, it has a start date, it has an end date. Okay, we don't need the contract for this particular scenario because this was just related to the goods, but this is related to the service, and when you are providing the service, you need to create a service contract. Okay, so in the service contract, you will be having the start date, you will be having the end date, and you will be having the total contract price. So total contract price is 1200 USD, and since you are providing this for 1 year, system should, we'll talk about how it will, but system should automatically calculate how much of this 1200 should be divided into different periods and when exactly the posting should take place in the system, right? So this is a requirement. We want to post 100 per month automatically from the system. So how the system will do this? Let's say if I'm not using the revenue recognition functionality in SAP, is there any another option to do this? Is there any other alternative or workaround to post these entries every month end? It will be all manual, right? If you want to do this, it will be all manual. You have to do the FI posting every month end just to recognize the revenue. Okay, and that is the reason we need the revenue recognition module in SAP, which should automatically perform this task. So we will just tell the system that we have a service contract with this customer at this price, which is valid for 1 year. And then system should be capable of automatically calculating how much revenue should be recognized per month. Not only calculation, it should be also capable to post this amount at every periodic reporting at every period end, right? So that is something that we are going to discuss here. That is something which we need to understand how it was working in SAP ECC with the current SD revenue recognition functionality, and then how it has been changed with the new legal requirements of IFRS 15. Okay, so now let's talk about this question itself. There are two ways of handling this issue. One is, we are saying 100 USD should be recognized per month. Okay, so what we can do is the billing. What do you think? The billing should be created only once, or you want to create separate billing per period?
So I think billing will be created once at the beginning of this contract.
Okay. Let's say I created the billing. Okay, I'm adding this scenario here. So billing is created of the contract. So what will happen? If I create the billing at the beginning of the contract, my entire 1200 USD will be recognized as revenue, right?
Correct.
But is it correct?
Gaurav, it's not like that. So we need to book 1,200 in a deferred revenue, which is not a revenue account, which is a balance sheet account. And every month, this deferred revenue account will be credited, and the revenue account will be credited by using revenue recognition.
Perfect. Yes. So if we continue to do this, if we create the billing at the beginning of the contract, then also we need to tell the system that don't book this 1200 USD as a revenue.
Right.
Okay,
Correct.
what we can tell them is book this 1200 USD as deferred revenue. Okay, we'll talk about what is deferred revenue. Deferred revenue is the revenue for which you already created the billing document, but you are still not received or you are still not completed that particular service.
Right.
Okay, so as we discussed that, although we are creating the billing now, because we need to give the bill to the customer, and maybe we are also expecting the payment in advance. Okay, normally whenever we are talking about the kind of service that we are buying, okay, let's take an example of insurance. You are taking the car insurance or you are taking the car warranty. So normally the contract is made for 1 year, but we need to pay upfront, right? And if we want to pay upfront, we need a bill. So normally we ask these companies to give us the bill. Now, if they give us the bill, what they are doing is they are already booking some kind of accounting entries in their books because they want to collect the payment from us. But what we want to do is, although we are creating the billing document, but we want to make sure that this billing is not recognizing the complete revenue in a particular month. It should be automatically able to calculate how much amount should be recognized per month. And that is the reason this will be termed as deferred revenue. So as I told you, deferred revenue means the billing is created, but it is still not recognized. Okay, so what will happen?
Sorry, I have a question here. When you raise a bill in the beginning of the contract period, and if the customer is paying within a month, so why can't you recognize the revenue immediately? Because you are not going to return this money to the customer at any cost, right? And you already payment from the customer. Should it be deferred revenue? Why not book the revenue?
Sorry, can you come again?
Yeah, sorry. So my question is, you have raised the bill at the beginning of the contract, and customer has paid the money within 1 month, and you're not going to return this money at any cost. So why can't you recognize the revenue immediately?
So see, again, this is a question of returning or not returning. We're not talking about returning the money or not returning the money, because we are not talking about the cash-based accounting here. This is the accrual-based accounting. If you remember, I told you that day, the revenue, what we are doing is, we are saying the material has been delivered to the customer or service has been provided. So we are entitled to book the revenue, irrespective of whether we received the cash or not. So we are totally not talking about cash concept here. Irrespective of whether we received the cash or not, we are not going to worry about whether the revenue will be recognized or not. Now coming to your question, you are saying, let's say we build this customer and customer is, you said he is not paying, right?
No, he has already paid in the first month itself. So why can't you recognize the revenue at that time?
You are saying if the customer has already paid us, then why we are not booking the revenue? Again,
Right.
the answer is because we are not following the cash-based concept. We are talking about the accrual-based, and accrual-based says even if you receive the money, you cannot recognize the revenue till the time you are not delivering the service to the customer. Okay, because this service you are going to deliver for entire 1 year. It is not like the current month service. For example, if you are charging 1200 to your customer in this period, in this current period, let's say in the month of July, you are only going to give the service for remaining days. How many days? It is around 23 days. Okay, so you cannot say that in July I gave the service of 1200 USD. In July, you have just given the service, that is 1200 divided by 12 first, and then maybe multiplied by the remaining number of days. Okay, so the revenue recognition concept says you have to book or you have to recognize the revenue only for the number of months or number of days that the service has been provided in the particular month. And that is the reason you don't need to worry about whether the cash is given by the customer or not. You need to worry about whether the service are provided in a particular month or not. Right, Rama?
Yeah, thank you. Thank you.
The question that you are asking is cash-based concept. So there are some companies which are following cash-based, or maybe they are doing the parallel reporting in the cash-based. But normally, when we are talking about the standard doesn't allow the cash-based concept. They always work on the accrual-based concept. This is called as accrual-based concept, where we don't need to worry about cash. It is all about the recognition based on the amount of services you provide or amount of goods that you transferred the ownership. Okay, so going to the same example. So billing is created at the beginning of contract. 1200 USD will be recognized as the deferred revenue. I'll tell you how exactly this works. Now this means that at the beginning of the period or at the beginning of the contract, you will be booking 1200 as the deferred revenue. Let's take it from, let's say the contract is starting from 1st of July 2018 to 30th of June 2019, right? So this is the validity of the contract, which means if I'm booking this 1200 as a deferred revenue today, because I'm starting this contract from, 1st of July. In that case, on 1st of July, this 1200 will go to deferred revenue. Okay, but what will happen every month end? I want, because once the month is completed, then this has become my revenue, right? So whatever was available in the deferred revenue, every month end, I want this 100 to be transferred as revenue. So what will happen? Your deferred revenue will become minus. Let me enter it here. So 31st of July 2018, there will be the negative posting of minus 100 in deferred revenue, because that deferred revenue will be transferred to actual revenue. Okay, and this will continue for next 1 year. Okay, so 31st of July 100, 31st of August again 100. So this will continue till 30th of June 2019, 100. What will happen? This will become, if I club everything, I'm not talking about this date. If I club everything, this will be minus 1200 as the deferred revenue. So at the end of the contract, that is on 30th of June 2019, if you go and see for this particular contract, how much value is available in deferred revenue, that will be blank. That will be zero, because whatever was booked in the deferred revenue has already been posted to actual revenue account. So at the end of this contract, your actual revenue account will show you 1200 as your recognized revenue. Right? This is when you are doing the billing today itself. Okay, so what we understood that whenever we are entering in any kind of service contract, which is not only for a particular month, which is for, let's say, the entire year. Now in entire year, there are 12 periods, and normally in accounting, we follow the periodic approach. When we are saying the periodic approach, this means if we are providing the service for next 1 year, whatever will be the amount that we are collecting from the customer, that will be distributed equally per month. Okay, and that per month amount will be treated as the recognized as a revenue for that particular month. Okay, and in this scenario, we said we are doing the billing at the first day of the contract itself, and that is the reason this amount will go to the deferred revenue account. Okay, and every monthly the amount will get transferred from deferred revenue to actual revenue account. So at the end of the contract, your deferred revenue will become blank, 0, and your actual revenue account will show you all this 1200 as the recognized revenue. Clear on this? Any question till now? Okay, so this scenario was selling warranties for 1 year for 1200 USD and writing here billing at the start of contract. Okay, now again I will give you the same scenario, but there will be small difference. So let's talk about the third scenario. This is scenario number 3. Same thing, selling warranties for 1 year at 1200 USD. Okay, so your revenue will be 1200 USD definitely, but billing at end of period. Okay, do you know what is the difference between these two? Here we created the billing for the entire year at once. Here what we are doing is we just created the contract. Billing will be done every monthly. Okay, so in that case, what do you think? What will be the difference in this scenario and this scenario?
So here you are saying the billing will be done at the end of 1 year, right?
No, I'm saying billing at the end of every period, every month.
That means that you'll send the bill to the customer every month, like at the end of every month. In the first one, you build it all the bill at once in one bill. Like you'll be okay.
There will be 12 different bills. Okay, so may not be relevant in this, but I can give you the example of other industries because we are just talking about the different kind of industries. So let's say instead of selling warranties, if I change the industry itself and say this is very common, data plan bills are coming to you every monthly. So they are asking you to enter into 1 year contract to, let's say, I'll give the this example in more detail. So this is a data plan. Data plan means normally monthly plan. If you are going for a monthly plan, it will cost you 120 USD. There is some background noise. Yeah, let's say the monthly plan is per month. Okay, and the service provider is asking you if you enter into yearly contract. They will give you at 100 USD per month. Okay, but the billing will be still monthly. They are not saying that you pay the upfront amount. They are just saying that there will be the condition you cannot terminate the contract in the mid of the year. Okay, the billing will be continued to be issued every monthly, but only if you continue this plan for 1 year. If you stop in between, then there will be the settlement or penalty, whatever it is, right? So let's say they are asking you for some deposit of 500 USD, and then you are going with this 100 USD plan. So the bill is happening every monthly. So what do you think? What will happen in this case?
So 1200 USD will not be recognized as deferred revenue, and invoice of rupees of USD 100 will be recognized every month as revenue on billing.
Okay. Yes, it is the correct answer, because the deferred revenue will only come when you already done the billing at the start of the cycle, start of the contract. This is the example of billing. This is like a billing plan. So we are not creating the billing at the beginning of the contract. What we are doing is we are creating the billing at the end of every period. Okay, so what will happen? You will create a sales contract. We'll create a sales contract with start date, end date, value, everything. Okay, and we will also assign the some background. John, can you just mute yourself? Yeah. So you can define that I want to recognize the revenue at the end of every month, or even I want to create a billing at the end of every month. So you must be aware of the billing plan. Billing plan means it will automatically generate the billing plan for you. So it will tell, okay, at the end of 31st July 2018, system will bill 100 USD. Again at 31st of August 2018, system will bill another 100 USD. Okay, so this will continue till 30th of June 2019. So every monthly system will generate the invoice, and revenue will be recognized as soon as the billing document is created. Okay, so in this scenario, as you can see, it will not generate any kind of deferred revenue. Clear on this?
That's
So
it.
Yeah, depends upon what scenarios you are entering. So first scenario was you are creating the billing in upfront. Here you are not creating the billing upfront, so you will be creating multiple billings. So we can call this scenario as one billing, multiple revenue recognitions, right? So you are creating the billing document once, but you are recognizing the revenue every monthly. This is like multiple billing documents and multiple revenue documents. Okay, so billing will be done every month and revenue will be recognized instantly after the billing is done. Okay, and there can be the fourth.
Yeah.
Yes, go ahead, Rohit.
We can add one more scenario here where billing will be done at the end of 1 year.
I'm coming to that scenario. That is the fourth scenario. Okay, so you are selling, let's say, data plan, warranty, or insurance premium, whatever you want. Okay, so selling the insurance premium for 1 year. Again, let's keep it the same amount, that is 1200 USD. But this time, billing will be done at the end of year. Okay, so you are only required to pay the amount after the year is completed. Okay, let's take this example. Let's say you are entering into the insurance or maybe data plan where they are first asking you for deposit of 1200 USD. Okay, but this 1200 USD is not they are going to bill. They are just asking you for the deposit, so that once you complete the entire contract, they will give you the bill, and if you don't pay the bill, they will deduct you from your deposit. Okay, so forget about that. Let's say the company is trusting on you and they are first providing the service, and then at the end of the contract, they are generating the bill and they are expecting the payment from your side. Okay, let's keep it that simple. So in that case, what will happen? Now, in this case, even I cannot go with this billing plan. Definitely there will be the billing plan, but in this billing plan, what was happening? When I create the billing, let's say I'm talking about the third scenario now. So what was happening when I was generating the bill every monthly? What will happen? Your revenue will definitely go up, which is credit, right? Revenue is normally credit by 100 USD. And since you are billing this, billing means you are telling that yes, I want this amount from the customer. So your customer account was also getting debited. Okay, so the cycle was closed here itself. Customer debit to revenue credit. You are booking the revenue, you are recognizing the revenue, and at the same time, you are asking the customer to pay this amount, right? But in this case, you cannot ask your customer every monthly. Definitely you are booking the revenue per month because that is something that you need to do. Your revenue will be definitely gets credited by 100 USD every month. But what about this account? You cannot ask your customer. You are only asking the customer at the end of the year. In this case, there will be another account called as unbilled AR. Okay, what is unbilled AR? This is just like a clearing account. Here we use the clearing account deferred revenue, and here we are using the clearing account called as unbilled AR. Because for 12 months, we will keep on adding 100 USD per month in this account. So at the end of the contract, you will see that in unbilled AR, there is a balance of 1200 USD. Okay, and when you create a billing at that time, what you are going to do, because revenue is already booked, revenue is already recognized per month. All right, so your actual, let me write it here. So this will be every monthly and at the end of contract. What you will do at the end of the contract? Your actual customer will get debited, and whatever amount is available in unbilled AR account, that will get credited. So at the end of the contract, your unbilled AR is 0, your customer is debited with 1200 USD, and your revenue is also credited with 1200 USD. That's in the contract. Clear on this? Any questions till now?
Quick question, yeah.
Yes.
Hello?
Yes, go ahead, John.
Yeah, concerning on being on bill account, my question is under what regulation is it IFRS 15 or under the old regulation that will create on bill revenue account?
Sorry. Can you ask again?
Yeah, like this entry you just made.
Which one you are?
Yeah, can you hear me?
Yes, I can hear you, John.
The unbilled revenue and the unbilled account receivable. That is unbilled account receivable, right?
Mm-hmm.
Is that unbilled account receivable?
B account receivable, billed account receivable.
Unbilled account receivable.
It's unbilled account receivable.
Okay.
Just give me a minute. I'm not able to hear you clearly. Just give me a minute. Let me change my headphones. Hello, can you hear me?
Yeah, I can hear you.
Yes. So one last question.
So when you create unbilled account receivable,
where is B account receivable? Which entry you are talking about? B account receivable, which one?
Gaurav, he is talking about unbilled account receivable.
Unbilled, this one.
Yeah.
Okay.
You know, when the account is debited and revenue account is credited, under what regulation is that? Is it the IFRS 15 or the old IFRS requirement?
No, John, see, this whatever we are writing is basic accounting. As of now, we are still not talking about how this will happen in IFRS or how this will happen in GAAP. We are just saying that whenever we come across this scenario, okay, where we are billing the customer at the end of the year, how our accounting entries will be passed. So we are just talking about that. But now we will, yeah, we will dig down more into the details, because what we are doing is we are saying the scenario is this, but who is telling us that this is a scenario? This is either IFRS or GAAP, right? So that we will talk about later on. But we are just saying, okay, this is where we are getting, where we are doing the billing at the end of the year, how the accounting entries will be passed in the system.
Okay.
So, can you repeat the fourth scenario just quickly in 1 minute?
Or you're saying first scenario?
Fourth, the last.
Fourth scenario, okay. Yeah. Okay, I'll just explain once again all these 4 scenarios, so that I think some of you joined later. So you come, you are also able to understand this. Okay, so what I have done is, I've shown you 4 scenarios till now. The first scenario is very straightforward. In the first scenario, we are saying customer has ordered the material, okay, the physical object. For example, you can see company who is selling the car. So customer has given the sales order to this company that he wants a car. So what will happen? The company will create the sales order. They will transfer the delivery to the customer, and finally they will create a billing document. Okay, but since this billing document is only one time and the transfer of goods and services is already handed over to the customer, this will be recognized as the revenue at the time of billing itself. There is no question of periodic processing. There is no question of entering into the contract, right? Very straightforward. So this can be achieved with the normal SD functionality without activating any additional revenue recognition functionality in SAP. Okay, very straightforward. Coming to the second thing, second scenario is when you are, let's say, the same company who was selling these cars, they are also selling the warranties. Okay, they are selling the warranties for 1 year at 1200 USD. Now, when we are saying the service, and that too for 1 year, this definitely means we cannot recognize all the revenue of 1 year in one single period. When we are saying 1 year, and if you are following the periodic approach, definitely we need to identify how much per month, and that per month amount we need to post, or we need to recognize as a revenue every monthly, right? So we need to recognize, we already know that 100 USD will be recognized per month, but within the same scenario I added 3 sub scenarios. Okay, so we are saying in the first scenario, billing is done at the start of the contract itself, which is a normal case, right? Whenever you enter into any warranty or any kind of contract, normally you ask the customer to pay there itself. So you create a billing document and you receive the payment on that particular billing document. Okay, so whenever you are creating the billing at the start of period, what is happening? You are not recognizing the revenue at the start of the period, but you are doing the billing. So which means your customer account will be debited by 1200 USD upfront at the beginning of the contract itself. But the corresponding entry, which normally goes to revenue, you are not allowed to book the revenue at the start of the contract, because revenue must be booked every period, okay, every month end. This means till the time my revenue is actually not recognized, where should I keep it? So I'll be using the account called as deferred revenue account. So deferred revenue account means this will be the account used to hold all the revenues which are not recognized. But at the end of the contract, you will realize that whatever amount was available in the deferred revenue, that will automatically, every monthly, you need to move from deferred revenue to the revenue account. Okay, so that is the reason you can see the second scenario is you will be using the deferred revenue account. Okay, any question till the second scenario? Okay, let's go to the third one now, which is again the same. The contract is valid for 1 year for 1200 USD. So definitely per month cost is 100 USD, right? We need to recognize the revenue only 100 USD per month. But here we are not doing the billing at the end of, we are not doing the billing at the start of the contract. We are allowed to bill at the end of every period. Okay, so what we were doing here is we were billing for entire 12 months at the start of the contract. But here we are billing at the end of every month, which means we will be creating 12 billing documents for 1 year, right? And since we are doing the billing at the month end, so at the month end, we are already entitled to book the revenue, and we are also entitled to collect the money from the customer. So there will be no clearing account required here. There will be direct account. Customer and revenue accounts will be posted directly, right? So there is no deferred revenue required here because revenue is directly booked at the end of the month. Any question on the third scenario? Okay, let's proceed to the fourth scenario now. In the fourth scenario, we are saying the same thing. We are entering into the contract for 1 year. The value is 1200 USD, but billing will be done at the end of the year. So you are not allowed to do the billing at the beginning of the contract, and you are also not doing the billing at the end of every period. The billing has to be done at the end of the contract. What does this mean? If I'm doing the billing at the end of the contract, every monthly I need to book the revenue, right? So if I'm booking the revenue, which corresponding account I will use? Earlier I was using customer account, but I cannot use customer account here. And that is the reason there is another account called as unbilled AR or accounts receivables. Again, this is a temporary account. At the end of the year, this unbilled AR account will nullify and everything will be available in the customer account. Ramakrishna, clear with this?
Yeah, thank you.
Okay, any questions? Now I am going to show you all these things, how they are configured in SAP. At least whatever the scenarios that we discussed till now.
So, and we can have a combination also, right? I am
Yes.
aware of a scenario which is
Yes.
2 4.
Exactly, Ramakrishna. We are starting very basics, right? We are just understanding the basics. We need to go through complicated scenarios now, because it may happen that in one single sales order you also have a material, you also have a service. Material you want to recognize now itself, service you need to recognize every month. So those complicated scenarios will follow.
Okay, thank you.
Okay, so if no questions here, I will just show you how it was done in SAP SD till now. Okay, I'm still not talking about IFRS, I'm still not talking about the locals gap. I'm just telling you how these things are handled in SAP. Okay, so what I'll do normally, as you know, the first thing that we need to do in order to perform any kind of transaction in SAP is making sure that the configuration is properly set up. Right, so I'll go through SPRO. This is my SAP ECC system. Okay, I think this is EHP7, which has the earlier component available, that is SD revenue recognition. So that configuration is available within sales and distribution. Within sales and distribution, you need to go to basic functions. Okay, and account assignments and costing. Okay, so this is a place where you will find account assignment costing. Within this, there is a folder for revenue recognition. So this is the only configuration that you need to maintain from the revenue recognition perspective.
Gaurav, can you please repeat? Gaurav, just a minute. Can you please repeat? This is that beginning with SPRO.
Yeah, you need to go to SPRO. Then there is a separate folder, as you know, for sales and distribution. Within sales and distribution, you have basic functions. Under basic functions, account assignment and costing. And then you have revenue recognition. Okay.
Fair enough. Thank you.
Yes. Now the big question is, how the system will know whether you want to follow the first scenario or second scenario, third scenario, or fourth scenario. Okay, first one is fine because you are creating the sales order. Normally, for first scenario, we create a sales order. So there is no question on that. But coming to second, third, and fourth, these are all contracts, right? You create a contract for 1 year. Now, when you are creating the contract, how the system will know that this contract is relevant for billing at the start of the contract, this contract is relevant for billing at the end of every period, and this is relevant for billing at the end of the year. Let's say I go and create the contract in SAP. Let me show you how I can create the contract. There is a transaction called as VA41. Okay, so don't worry about this. I'm just giving you the glimpse of this. We are going to explain all these things in detail. If I go to VA41 to create a contract, and normally for this kind of service contracts, we use contract type SC. Okay, whatever is your organizational data, whatever sales organization distribution channel you are using, just press enter. Okay, here you need to enter. This is, you can see this screen is very much similar to the sales order screen. You can enter the sold to party here, which is your customer. Enter. You can see this contract start and contract end. So these are the default settings which are maintained for this order type SC, contract type SC. What is happening? The contract is starting from today and it is ending at exactly after 1 year. Okay, so those are the configurations. Don't worry about these dates. You can change the dates here also. These are the defaulted dates based on the configuration which is maintained for contract type. Okay, so the contract is starting from 4th of July till the 3rd of July 2019. I need to enter the material. Material can be service or it can be the physical material. So let's go for this service. Quantity 1, enter. Okay, now if I click on this and go for billing plan, you can see system is automatically able to generate this billing plan. So what we can see here is, because it is calculating proportionately, so it is taking from 4th, or maybe if you want, we can just change this date to 01 to make it easier. So from 1st of July to 30th of June. Okay, now if I click on this and go for billing plan, you can see this even amount is distributed throughout the year, every monthly. Okay, so the contract value is 1200 and it has been divided 100 per month. Now how the system will know whether I want to bill this at the beginning of the period, or I want to bill this at the beginning of the contract or at the end of the contract? That is normally specified within this item category. Okay, you must be aware of, if you are coming from SD background. Yes, Ramakrishna, any question?
Yeah, one more thing, how does the system know that 1 month is the period? So when you enter 1200, it's distributed into 100 each, right? So how does it know it's a monthly billing, quarterly billing, or half-yearly billing, something?
Yes, exactly. I'm explaining that only. So it is normally determined based on this item category. Okay, so this item category and the service contract that you are using, the contract type. When you configure this service contract type and item category, they are capable of identifying all these things, like what should be the default tenure of the contract. Okay, how this the amount will be divided into multiple periods and all. Those are all the calculations which are happening in the background. But as of now, don't worry about that. We'll talk about that in complete detail. As of now, just focus on how exactly the system knows that this billing has to be carried out in the first of the at the beginning of the contract, or periodically, or at the end of the contract. Okay, so that is mainly based on the combination of contract type and item category. So that is the reason the configuration which I'm showing you now, Okay, the same configuration steps as I told you, sales distribution, basic functions and all. So here the first configuration itself is set the revenue recognition for item categories. Okay, so you are telling the system how system should behave based on different item categories that you have here. Okay, so you can see these are the different item categories. If you take any example, let's go for ZRRT. This is where you specify what kind of revenue recognition is applicable for this particular item category. Okay, so there are this much different options. Okay, or maybe let's do this F1 and it will tell you what are the available options and when to use those options. Okay, so first one is no value, which means if you keep it blank, then standard revenue recognition, as I told you, this first approach, which has nothing to do with revenue recognition, which is very straightforward. When you do the billing, system will automatically recognize the revenue and billing will be done once the material has been delivered to the customer, which means using normal sales order scenario. So you will find some of the item categories. Which one you normally use for normal sales order? Anyone, if you can tell me? TAN, which is a standard item. All right, so whatever item categories you use for your normal sales order processing, you will find this is blank. This means no revenue recognition applicable. It is very straightforward. When the billing will be done, revenue will be recognized automatically. Okay, so these settings will only come for item categories which you are using for this kind of contracts, not for the standard sales orders. Okay, so I'll again go to ZRRT. This is a Z1, so don't rely on this. Maybe in your system you might be using some other item category, so you can check it out what you are using in your current system. Okay, so you can see this revenue recognition have multiple options. I will again go to F1 and let's see one by one. So we already know no value means normal standard, normally sales order processing. Then there is A, which is time related revenue recognition. Just give me a minute. Sorry. So second one is A, which is time related revenue recognition. What do you mean by time related revenue recognition? So you can see the value is recognized in equal amounts based on accrual period of the items. This means this third scenario. We are talking about this scenario because this is definitely time related, right? Every monthly we are recognizing the revenue. Okay, the second thing is it is sales document based. It is not a billing based, which means we don't need to create a billing at the beginning of the contract. Okay, this can be billing can be created at every period. That is the reason you can see this revenue will be recognized based on the sales document. Sales document means the contract that we created. So we don't need to create a billing first. Based on our sales document, based on our sales contract, system will automatically generate the revenue recognition at the end of every month. Clear on this? Time related revenue recognition, if it is based on sales document based, this means it will be generated at the end of every month. You don't need to create the billing at the start of the period. What if I go for this option? I want to create the billing at the start of the contract itself. In that case, I will use this option D, billing based time related revenue recognition. As the name itself suggests, which means you will create a billing document first. So if you are using this D as a revenue recognition method, this means the deferred revenue account will come into the picture. If you are using A, there will be no deferred revenue account. It will be just based on your contract. System will calculate the periodic value and it will post at every period end. Okay, so A and D are okay. Let's go to B. What is B? B is service related revenue recognition, which means it is not periodic. Whatever we have discussed till now, these are all periodic. We have still not discussed anything relevant to milestone billing, anything related to percentage completion and all, right? So apart from this normal 4 cases, there can be more cases. Like for example, let's talk about SAP consulting project. If you are working in the consulting company, what is our service? We provide the consulting services. So consulting company is providing consulting services and revenues are based on milestones, right? So once we complete the blueprint, we will charge you, let's say 30% of the total project amount, right? Second is once we complete the configuration part, or maybe instead of configuration, let's say UAT, remaining 50%, another 50%, and last one is at the time of go live, we will charge you 20%. So this is not based on period. This is not based on that, yes, this will be done on first month or this will be done on 6th month or whatever it is, right? This will be done only when you completed this particular task. So the revenue will be based on how much milestones you have completed, or maybe how much percentage of service you completed. Okay, so that is this one. You will be using B in case of milestone based billing or in case of percentage of completion billing. Okay, but again, this will be like you will be creating the billing only when the service or the percentage has been completed or the milestone has been completed. So you are not going to create a billing upfront and then you are recognizing the revenue. No. In case of milestone based billing, the billing is created only at the completion of the milestone or only at the completion of the percentage that is specified in your contract. Okay, then comes E, which is not relevant for us, which is only relevant for media industry. If time permits, we'll talk about this. And finally, we have F. F is, as you can see, it is based on the credit debit memo. So this is not the normal this is not the normal way of recognizing the revenue. This is only in case when you posted either based on A, D, B or anything, and then you want to post the credit memo or debit memo against it. Okay, so this is also something which we'll see directly practically in the system. It will not be easier for us to explain this. Okay, so in short, if you remember these 5 different scenarios, if you understand this, these are the different 5 scenarios which are required from the revenue recognition perspective. Then what we can do now is we will start with the first, we will go through the entire cycle. Then we'll go to the second one. Again, we'll go through the entire cycle, including the configuration and all. And once we complete all this understanding in SAP ECC system or SAP current SD revenue recognition functionality perspective, then we are ready to understand now why IFRS 15 is required, right? If these things were already being taken care in SD revenue recognition functionality, why IFRS 15 is required? So I'll tell you some scenarios which you will understand, yes, they are definitely not possible within this configuration, whatever is available in SD. Okay, so you will understand that whatever settings are available in SAP SD, they are not allowing us to follow IFRS 15 compliance. And in order to follow IFRS 15 compliance, we need the advanced revenue accounting functionality. And that is the reason SAP came up with SAP RAR. Okay, so we'll follow that approach. I think if you have any questions today, we can continue. Otherwise, the configuration and the end user perspective, the transactions and all, I will show you from tomorrow.